Hello Val investors, thank you for joining me. Today I want to talk about Datadog. My name is Michael from Deep Value Returns on Seeking Alpha. So we're going to talk about what Datadog is, what's interesting here, what's the opportunity, what I like, what I don't like, and then we're going to bring this all together by talking about its valuation. So let's kick this off. So Datadog is a monitoring platform, and it's kind of really expanded its offering. It now does infrastructure, logs, it even does security. So it's just becoming a part of a movement in the digital disruption, and it has a compelling story, and you can see already that there's a lot of tailwinds to its back. So it's well positioned and it's doing great things. So here's just one metric that I can point out to you. Right now, 25% of its customers are taking up 4 of its products or more. So this compares to 12% this time last year. So its customers are really resonating strongly with its offerings, and you can see that its dollar-based net retention rate continues to be at above 130%. So this tells you right away that it's consistent with previous quarters. Datadog's abilities to cross-sell and get more revenue from customers year over year is improving. So it's a strong platform, strong offering with more services and more revenue from the same base of customers. Another point of reference is that customers spending more than 100K per year is now at 79% of its annual run rate revenue. So in essence, this shows that the customer is sticky and the amount that customers are spending is increasing over time. So this is quite compelling. Finally, as of Q1 2021, it had 15,200 customers. This compares with 11,500 in the same period a year ago. So it has 32% more customers this year than it did last year, and it's also upselling to those customers. So all this together, obviously, not only do you have a very strong growing business, but it's able to have visibility into the end of the year and perhaps even longer, and it's putting out some guidance to grow this year at 47%. So by my estimates, Datadog will be growing at approximately a 1 billion run rate by Q4 this year. So it's a $1 billion revenue business growing at 47%. That's really something that's quite attractive. And for many investors, this is just, it's starting to become like a household name in certain spaces. So, it's quite attractive, right? So here's the thing, right? What I like about it is that it's growing very fast, and not only is it making free cash flow, but its free cash flow margins for this past quarter were 22%. So it's growing at a very fast rate. It's on a 1 billion run rate target and 22% free cash flow margin. So far, everything is stellar. The problem is that the stock is priced at 37 times forward sales. So that's a really punchy valuation. And if you want to compare with some of the other names, so I put out PagerDuty. PagerDuty is a stock that I own, and that's growing much slower. That's growing in the mid-20 rates, but it's priced at 14 times sales. They don't particularly have a lot of overlap. They overlap a little bit in some aspects. I think that PagerDuty is more to do with incident response, and it's not like it's more pure play in incident response. Datadog is much more broad in its offering, but nevertheless, there is still some overlap right here, and one company is priced at 14 times sales, the other one is priced at 37 times sales. So you don't really need to be a genius to figure out one has very high expectations, one has slightly lower expectations. So in any case, hope you found this video useful. Don't forget, come over to my marketplace. It's called Deep Value Returns on Seeking Alpha. I'll tell you the stocks I own and why. You're welcome to do a totally free trial to see if it suits you. If you like it, stick around. If you don't, unsubscribe anytime before 14 days, and no harm, no foul. So anyway, hope you enjoyed this video. See you soon.